GDP can move a currency fast, but the number itself isn't what experienced Forex traders focus on. What really matters is whether economic growth surprises the market, what it tells us about interest rates, and how one country's economy compares with another. Here are 3 practical ways you can use GDP data in Forex trading. The first way is to compare the actual GDP number with the market forecast. GDP, or Gross Domestic Product, measures the total value of goods and services produced by an economy. When GDP is growing, it generally suggests the economy is expanding. When growth slows or contracts, it can signal economic weakness. But here's where traders sometimes get caught. A positive GDP number doesn't automatically make a currency bullish. Imagine US GDP grows by 2%. That sounds good, right? But if economists were expecting 2.8%, the result is actually weaker than expected. Traders may react negatively because markets were already positioned for stronger economic growth. So when GDP is released, compare 3 numbers: the actual result, the forecast, and the previous reading. The size and direction of that surprise can help you understand why a currency is suddenly moving. The second way to use GDP is to think about what it could mean for interest rates. Central banks, like the Federal Reserve, European Central Bank, and Bank of England monitor economic growth alongside inflation, employment, and other economic indicators when making monetary policy decisions. If an economy is growing strongly while inflation remains elevated, traders may expect the central bank to keep interest rates higher for longer. Higher expected interest rates can support a currency because investors may find assets denominated in that currency more attractive. On the other hand, if GDP shows the economy slowing significantly, traders might increase expectations for interest rate cuts. That shift in expectations can put pressure on the currency. The key is not simply asking, was GDP good or bad? Ask, does this change what the market expects the central bank to do? That brings us to the third way, comparing economic growth between 2 currencies. Remember, every Forex trade involves one currency against another. You're not analyzing the US dollar in isolation when trading EUR/USD. You're comparing the United States with the Euro area. Let's say US economic growth remains strong while Euro area GDP continues weakening. If that difference also creates expectations for tighter US monetary policy and easier European monetary policy, the fundamental picture could favor the dollar over the euro. This is called economic divergence, and it can help you understand some of the larger trends that develop in Forex pairs. But there's one important warning. Don't use GDP as a standalone entry signal. GDP tells you about the economy, but it doesn't tell you the perfect price to buy EUR/USD or sell GBP/USD. I prefer combining fundamental analysis with technical analysis. Use GDP to understand the bigger economic picture, then look at trend direction, support and resistance, momentum, and price action to plan the actual trade. Also, be careful around the release itself. Major economic news can cause rapid price movements, spread expansion, and slippage. Know when GDP data is scheduled before entering a position and decide how much you're willing to risk before volatility hits. This is where having structured trade management can help. The TakePropips Trading Management Solutions. EA for MetaTrader 4 and MetaTrader 5 includes position sizing, risk-to-reward calculations, a trade manager, trailing stops, break-even management, and other risk management tools. These tools can help you plan and manage a position without pretending you can predict exactly how the market will react to economic news. So the next time GDP data comes out, remember these 3 things. Compare the actual result with expectations, consider how the data could affect interest rate expectations, and compare economic growth between the 2 currencies you're trading. Once you start thinking this way, GDP becomes more than another number on the economic calendar. It becomes part of the bigger story behind currency movements. If you want to learn more about the TakePropips Trading Management Solutions EA or gain access to it, visit TakePropips.com. And if you found this useful, like the video, subscribe for more Forex trading